Hey, hi. Yeah, what happened this week? Basically, nothing much to, not many places to hide. Crypto crash, or major correction. Bitcoin is at correct to about 35, near to 36. It was it was at about 40,000. A couple of yeah days ago. So you get all the consumer discretionary stocks like Amazon and all that, Etsy, C Limited, that owns a Shopee, Baba, and all that. Advertising companies like Trade Desk, Facebook all had a major correction. You get FANG stocks corrected as well. Microsoft went down to 275 from 300. Google is down to about 2003 from 2005. Um, you get the only thing that Nasdaq is definitely in bear market this week. Of course, the S&P 500 isn't officially in a bear market yet because I think it's supported by some oil stocks and some of those fertilizer stocks and companies that produce like Tyson that produce meat and poultry and all that. So uh, they have a basket of these kind of other companies in the S&P 500. That's why I still holding on to the S&P 500, that holding on well. And then this whole week you get Deutsche Bank, Bank of England, saying that recession is imminent in Europe. But they didn't say where, but it should be based on your own country. Then you have the Fed coming out with a 0.5% interest rates. Um, but if you look at some analysts, they are still saying that this is being too nice, and they don't believe the Fed. Let me show you this video.
Let's start with the jobs report and just start there because we've got a lot of work to do here. Your thought picture a little bit more.
Because right now we're dealing with supply side issues, and the labor market is part of the supply side issue. What we don't want to deal with is both supply side and demand side issues. And the longer we have supply side problems, the greater the risk that we're going to pull down demand. And then we have both supply and demand problems. So that's why I'm hoping that we are going to be able to relieve some of the supply pressures, because otherwise they will in fact pull down demand. And how? Inflation. So that's why it's really important to continuously ask yourself the question, are supply side issues really getting better at a fast rate? And they're not, unfortunately.
Are you concerned that the situation that the Bank of England is confronting right now is in the Federal Reserve's future?
I am, and I must commend the Bank of England. I wrote yesterday on Twitter, I wish other central bankers were as honest and as balanced as Andrew Bailey was. Yes, he talks about a very narrow path. He shares the risks. He talks about the possibility of 10% inflation. He talks about the possibility of recession. And I think it's critical for independent central bank, to put out their best judgment that are not politically influenced. And I think the Bank of England is leading the way on this.
If I may, are you implying there's something the Federal Reserve is not being open or honest enough about?
Yeah, I worry that the Federal Reserve has tried to be too nice to markets, be it the transitory inflation narrative that lasted way too long, be it what happened on Wednesday. You cannot come on TV and speak about all the uncertainties and then rule out a certain policy response, 75 basis points, and then give specificity to the neutral rate, 2 to 3%. We don't know what the neutral rate is in these conditions. You can't do these two things. Either you are honest with the fluidity you face and say there's a whole range of possible outcomes and we will continue to be very vigilant. Okay, or alternatively, you try to fool the market and it doesn't work because the market sees through it quite quickly, as we saw yesterday's reaction.
Yeah, so basically, as you can see, inflation side of things is actually the Fed Powell actually did mention it, and he said it pretty clearly. The supply side of things, right, like supply chain crisis and all that, is actually government political will, and they can only slow down the demand. But the interest rates issue, in increasing interest rates, is only one of the tools that can uh, slow down demand. You know, the to have price stability, reduction of price in goods, right? Another 50% of the role is definitely on the part of the government to making sure that there are enough like oil supply in the market, um, or kickstart some industries to not so reliant on China and Russia, so the price will go down if there's more supply out there in the market to meet the demands. So then, of course, you get the rental rates and mortgage rates all going up as well. These are also something that another inflationary issue. I'm not sure how. I think now with the increase in the mortgage rates now, the rental demands and the rental, and as well as the housing prices will cool down. So I think that will work itself out in a short period of time. So so far, hasn't been very good news. Not much good catalysts out there to buy. Just a series of negative catalysts. You can wait out in the market right now, or you can actually, um, you know, buy the dip right now, and this could be something that um, may be a perfect opportunity for long-term investor. So thank you very much for the video.